we've remarked that it is not necessarily about when the tightening is going to happen. That is certainly the case. It is about the dot plot guidance. But you think that that's not going to be interesting either.
Yes, well, I think that's where the market focus is going to be on. Obviously, I think the market's going to be focused on both the short term in terms of what the Fed is thinking it's going to do in December, but also the outlooks for 2018, 2019. So at this stage, I don't think there's enough to warrant a significant shift in terms of this path that the Fed's on in terms of gradual tightening. I think that there still can be the case made for a move up in December. Obviously, there's probably more question marks around the longer-term outlook, but at this stage, obviously, the market's already somewhat removed from where the Fed sits in terms of pricing in a much lower or softer trajectory in terms of US interest rates. So how the market reacts to that, I think, is probably going to be quite important in terms of where the dollar goes from here.
Jonathan, we've got quite a few major players in the market starting to adopt a bit of a strategy, a contingency plan for a stronger U.S. dollar, a U.S. dollar that's lost as much as it has, right? Double-digit weakness so far this year. Oversold, arguably, perhaps a chance with this Fed announcement for a rebound. Would you agree with that kind of statement? And how bullish would you be in the short term for that kind of rebound to happen?
Well, I think that's a reasonably sensible strategy in the sense that, at least on a short-term basis, the dollar does look as if it's potentially corrected too far relative to things like short-term yield spreads and things like that. But I would I guess, coin that in the context that it's probably more likely to be a tactical rather than a medium to long-term move. I think what's been interesting this year is that the Fed's obviously continued to adjust policy in a fairly moderate fashion, but we've had the dollar obviously undergo a significant correction, and we largely think that's because I guess the whole reflation trade that the US arguably started a number of years ago has now been pushed out into other parts of the world. Obviously here in Asia we've seen that very evident in China, but also other parts of Asia. But that's also been evident in other parts of the world as well. So the rest of the world, in a sense, I think is been playing catch up in terms of its growth performance relative to the US. So that's kind of diminished the impact of higher US interest rates and led to this kind of dollar sell-off. So where we get into, we can get back into a stronger US dollar environment, but that really requires the Fed to continue to tighten and the rest of the world to slow down somewhat. And that seems like a fairly unlikely scenario, at least in the near term. So my suspicion is that we may see the dollar correct higher, but I don't think that's going to be the start of a medium-term bull run in the US dollar at this stage.